Hello everyone, I am Gayantha Jayasooriya, your lecturer for Advanced Financial Accounting and Costing in AAT Level 2. Today we are going to discuss one of the most important aspects in your syllabus, which is accounting for salaries. When you are considering about your syllabus in AAT 2 Advanced Financial Accounting and Costing, this employee salary related accounting, we can see they are in two parts. One is the financial accounting part and other one in the cost accounting part. So today we are going to merge those two sections and to conduct our session. First of all, I am going to take the session which is related to the cost accounting part. That means employee salary related accounting. Right. When we are considering about the employee salaries, the main responsibility regarding employee salaries is based upon the accounting division of the company, and also HR division is helping them out in order to carry out this salary process. When you are considering about a company, let's say a large company, a multinational company, there are thousands and thousands of employees are there. So the salaries for each and every employee should be computed separately and they have to pay within the stipulated time period. So today we are going to discuss how the company is going to conduct this accounting process for the salaries. Right. Before we are moving on to the calculations and the computations, first we have to consider about some basic concepts regarding the salaries. Right. The first concept is the basic salary. Basic salary. Basic salary. Right. What do you mean by the basic salary? Usually the basic salary means the minimum guaranteed salary of an employee. The minimum guaranteed salary of an employee. That means this basic salary is entitled by the employee irrespective of the number of days that he has worked. Right. So you may have heard this term of basic salary in your day-to-day life. For an example, your parents may say their basic is this much. Usually they don't use the term basic salary even, they say my basic is this much. So your elder brothers and elder sisters, those who are working, or else sometimes you are working in some organizations. So when you are recruiting for that particular position, they say basic salary is this much. Basic salary is this much. So the basic salary means, as I said before, it's the minimum guaranteed salary of an employee. Right. So where the basic salary is mentioned in? Usually the basic salary is mentioned in the letter of appointment, or in simple terms the appointment letter. They say, okay, from this day onwards with the effective of this date, you are an employee of this organization and your basic salary is this much. So in the terms and conditions of the salaries and the payroll, they say basic salary is this much. So you are entitled to that salary. Right. But basic salary, is it the salary that is owned by an employee? No. There are some other additions. To this basic salary. As an example, we can say overtime. Overtime. In simple terms, you say OT. OT. Right. So the OT or the overtime, the amount of the overtime is not mentioned in the letter of appointment. They say, okay, as an example, let's say the typical week consists with 160 hours, or let's say a typical month consists with 160 hours. If you are working beyond that, it comes as overtime. So the particular rupee value of the overtime is not mentioned in the letter of appointment. Another example, let's say usual work time of the employee is from 8 AM to 5 PM. If you are working beyond 5 PM, that means after 5 PM, that counts as overtime. Right. So when we are considering about the rates for the basic salary and the overtime, usually the overtime or the OT rate is much higher than the basic salary rate. As an example, let's say the salaries are paid based on the number of hours that the employee has worked. When you are computing the basic salary, per hour, per hour salary is, let's say, 1000 rupees, but overtime OT rate per hour is usually, like, we cannot exactly say, around 1500. That means 1/2 of the basic salary rate per an hour, right? Therefore, overtime rate is higher than the basic salary rate, right? So, first concept that you have to familiar with is the basic salary. The other one is the overtime, the concept of overtime. Then you have to know another concept which is the allowances. So what do you mean by the allowances? You may have heard of these words for sure. So what do you mean by the allowances? Allowances means, again, it's like some additions to the salary, and they are not specifically mentioned in the letter of appointments. As an example, we can say a New Year allowance, Christmas allowance. So the organization is paying for their employees on behalf of some specific reason, some addition to the basic salary. We can consider it as an addition to the basic salary. And also, one special thing that you have to understand is, it's not the overtime. Allowances are not the overtime. Overtime is something else. Allowances are usually, it depends on the company policies, they pay for their employees, right? Then the next most important concept is actually the overtime and allowances. You may have heard of them. They are in the general sense. You all know about that meaning. After the basic concept, the other most important concept is the gross salary. Gross salary. So what do you mean by the gross salary? Gross salary. So gross salary means the addition of the basic salary, overtime and other allowances. The combination of all the salary items, we say gross salary. So always you have to keep in your mind, gross salary is higher than the basic salary. Gross salary is higher than the basic salary. Why? The gross salary consists with basic salary and other additions. Additions in the sense overtime and allowances, right? But if we say the gross salary, okay, gross salary is higher than the basic salary, that's true. But employee cannot take that gross salary in full into their accounts as the salary, as a salary. Why? What's the reason for that? Why they can't get the gross salary as their actual salary? Because there are some deductions that the company is making from the employees. Now, some deductions. Some of them are like mandatory deductions. That means they are stipulated by the law of the country. Sometimes they are company policies. Deductions. So what are the deductions? What are the main deductions that we have to consider about? One of the most important deduction is the pay deduction. Pay deduction. P-A-Y-E. Pay. Actually, this is an abbreviation. So what does that mean? Pay as you earn. Pay as you earn. So what do you mean by the pay? Pay means it's a kind of tax. That the government of the country is charging upon the employees. So we know in Sri Lanka, people are not that much interested to pay the tax. Therefore, they always try to evade the tax. I think you all know about the tax evasion. They always try to reduce their tax, or they try to get away from the tax payments. Therefore, government say, okay, they don't say the employees to pay the pay tax or the pay for the government directly. They say to the employers or the organizations, they say, okay, from the gross salary, deduct the pay of the employee. Right? Then transfer that amount to the Inland Revenue Department. So Inland Revenue Department is the official body for the tax collection. Right. Therefore, the employers, what they are doing is they are deducting the respective pay amount from the salary of the employee, and then they transfer that into the Inland Revenue Department. In simply we say IRD. Right. It's one of the important deductions. Another one is EPF. We say Employee Provident Fund. So what do you mean by the EPF or the Employee Provident Fund? Right. This is not a tax. This is a kind of saving, or we can say a mandatory saving that the employee should do. Right. So what's the process behind the EPF? Okay. So we know that as per the normal way of the Sri Lankans, they are not interested to save. They always try to consume what they earn. So government knows that. Therefore, government says, okay, from the gross salary or from the basic salary, whatever it is, deduct 8% from the gross salary or the basic salary, and transfer that amount to the Central Bank of Sri Lanka. Deduct 8% from the gross salary or the basic salary and transfer that amount to the Central Bank of Sri Lanka. Right. So now from the gross salary, that amount is now deducted. Right. So again, the amount that is receivable to the employee as their salary is now getting reduced. So what's the purpose of charging this EPF? Actually, we cannot say charging of EPF, the deduction of EPF. So what's the reason? What's the main reason for this deduction? So the main reason for this deduction is, okay, from each and every month, 8% of the either from the gross salary or either from the basic salary. This 8% is deducted. Then each and every month this amount is transferred to the central bank, and in the central bank a separate account is maintained on behalf of each and every employee of the country. So every month EPF is deducted and it is deposited in the EPF accounts, respective EPF accounts for each employee in the central bank. Right. Then after the retirement, let's say this employee is working for, let's say, 40 years or 35 years. After his employment in the sense not in one organization, he's at the very first phase he's working in one organization, then he's moving into another organization, then again working in another organization. Likewise, we know employees are not working for a long time in one organization, right? Some employees are working, but most of the employees, they are transferring from one organization to another. So after his whole working life or the working experience, let's say 40 years, after completion of 60 years of that employee can receive this EPF amount in total. Let's say 8% of their salary is deducted each and every month. So in that case, there are like 40 such years. The total amount for that employee can be received at the retirement. That means at the age of 60. At the age of 60. So at the age of 60, that employee is receiving a considerable lot of money. Considerable amount of money. Right. So that's why I have told you that it's like a saving. It's like a saving for that employee. Right. So, but when we are considering the today's case, the current situation, this EPF is a deduction for that employee. Deduction for employee. Right. Then there are some other deductions as well. As an example, we can say deductions for welfare organizations. Welfare. So usually we know each and every organization for employees, there are like welfare organizations, so the welfare societies, we say welfare societies. So for welfare societies, from their salaries they are deducting small amount, right? 100 rupees, 200 rupees, 500 likewise. Small amount is deducted for the well-being of the employees of the organization. So again it becomes a deduction. And also another one, most common deduction is the loan installment deduction. So what do you mean by loan installment deduction? The employees can obtain loans from the banks, and they say, okay, I'm not going to pay the monthly loan installment. The organization will pay for the banks by deducting that installment from my salary. Right? So you have to have the arrangement with the organization and the bank. Then the employee don't want to pay the installment separately to the bank. Apart from that, what's happening? That loan installment is deducted from the salary of that particular employee. Right. So there may be some other deductions as well. It depends on the situation, but usually those are the major deductions. So in your case, when you are considering about the exam point of view, you may get usually this EPF, pay, and some other deductions. Right. It depends on the situation, and in your case it depends on the nature of the question. You may find when you are going through the past exam questions, there are some other kinds of deductions as well. So nothing to worry, you have to just consider it as a deduction. So while you are reading the question, you should get the understanding that okay, this is not an addition to the salary, this is a deduction from the salary. Right. Okay. So from the gross salary, all these deductions are now deducted. Right. Then the next concept regarding the salaries is that net salary. So what do you mean by the net salary? This is very easy. Net salary, okay, this is the amount that is received by the employees, as their salary. So this amount is credited to the employees' personal accounts as the salaries. Right? Okay, that means from the gross salary, all the deductions are made, then this amount is paid to the employees. Right. Okay. From this point, the salary related accounting is somewhat over. That means the majority of the salary related accounting is over from this point, because okay, we have calculated from the basic salary, then gross salary, then net salary. Okay, now we have to pay that salary to the employees. But there's an employer contribution towards the employees in each and every organization. So we say that's the employer contribution. So from this point, from the net salary, the story related to the employees is now officially over. From the net salary. Then after employer's contribution is coming up. So employee is nothing to deal with that part. Right? This is a contribution made by the employer or the organization. Right? Employer's contribution. So you have to familiar with these terms. Employer contribution. Right. There are mainly two kinds or the two types of employer contribution. One is, as you know, EPF. Okay, now you may get confused. Okay, why? When we are considering about the deductions from the employee salaries, from the gross salaries specifically, there's one part called EPF. Yes. So in that point, I have mentioned you that that's a deduction made from the employee's salary. If you can remember, the percentage is 8%. So as I told you, that 8% can be computed either on the basic salary or either on the gross salary. It's company policy. Right? So why again the CPF is coming up? What's the reason? Right. Employee is making we can say an investment on behalf of his or her future, a saving for his or her future. Right. In the same way, employer is also having the responsibility towards their employees. For what? In order to ensure their future. So what they are doing is they are also making a contribution towards each and every employee. So they are making employer contribution of 12%. So most important thing that you have to understand in here is this 12% is not deducted from the employee's salary. This is an expense from the employer's point of view. Right. Okay. And also you have to focus on this matter as well, the percentage, 12%. Employee is contributing only 8%, but employer is contributing 12%, which is much higher than the employee's contribution. Right. Then other deduction is the ETF, Employee Trust Fund. So this is one of the specific contribution made by the employer. So there's no any ETF deduction from employees. This is only from the employers. Right. The percentage is 3%. Again, so what's the basis to calculate this 3%, 12%, 8%? Either gross salary or either basic salary. Right? Okay. So those are the basic concepts regarding the employee salaries. Right. So with that knowledge, now we have to prepare the payroll or the salary sheet of an organization. With the knowledge that you have gathered up to now, up to this point, now we have to prepare the salary sheet or else the payroll for the organization. Okay. So next step is to prepare the payroll. Right. Now let's practice what you have learned by using a past examination question. Right. So before that, I have drawn the format for the payroll. So usually this is the format for the payroll. So at the top of the format, you can say the name of the company, then payroll for the month of whatever it is. Right. Okay, let's see. We have to start the payroll or the salary sheet with the name of the employee. Then other things are as it is from the concept that you have discussed. First, you have to say the basic salary, then additions to the basic salary, OT and the allowances I have to 2. Then addition of basic salary, OT and allowances comes up to gross salary. Then the deductions. So I have selected one question, so depend on that question. There are only 2 deductions as EPF and the insurance. Then if there are more than one deduction, you have to have another column called total deductions. So you have to put the total of the deductions here. So this deductions, as I said you, it totally depends upon the nature of the question, nature of the situation, right? So if there are more, like let's say a deduction called loan installment, you have to add another column for that. Likewise, then you have to deduct the total deductions from the gross salary, then you are getting the result of net salary. Right. From this point, the employee's part is over. Then the employer's contribution, EPF 12% and ETF 3%. Right. So this says the payroll or the salary sheet which is applicable for the whole company. That means we are preparing this payroll for all the employees of the organization. This payroll includes details or the information of all the employees of the organization. Right. So in order to practice what you have learned, let's take the latest exam paper, which is July 2020, question number 2, subpart B. July 2020, question number 2, part B, subpart B. Right. Let's read the question very carefully. While reading the question, you have to decide the format of the payroll. Why I am saying? So you have to decide what are the additions, OT, allowances and all. You have to decide. Then the deductions. Other columns are same as it is, but those 2 parts you have to decide while reading the question. Therefore, definitely you have to read the question before you are attempting it. Right. The following information relates to 4 employees of Blackmark Private Limited for the month of February 2020. So you have to say payroll for the month of February 2020. So marks are not allocated for that part, but it's better to say that as well. Even you can say name of the organization, which is Blackmark Private Limited, right? Then details are given for 4 employees of the organization. Who are the 4? SM Kavindra, LV Gayesha, TB Yamuna and SP Roshan. Right. Then wage rate per normal working hour. They have given the wage rates. So it's different. For Kavindra it's 100 rupees per hour. For Gayesha it's 110 rupees per hour. Yamuna 115 rupees per hour. And Roshan, it's not applicable. NA means not applicable. Wage rates, there's no wage rate for the Roshan, but instead he's having a fixed basic salary of 35,000. Right. Then hours worked during the month, Kavindra 180 hours, Gayesh 170 hours and Yamuna 160 hours, and number of hours worked is not applicable to Roshan. So what's the reason for that? Usually the production employees or the basic employees of the organization, their salary is paid upon the number of hours that they have worked. In this case, Kavindra, Gayesha and Yamuna, they are the we say operational employees of the organization. So their salaries are paid by using the number of hours that they have worked. But if we take Roshan, we can say he is like a senior person. Their salaries are not paid upon the number of hours. Usually they are getting a fixed monthly salary. That's why he is getting a 35,000 fixed salary. Right. Therefore, the number of hours that is working in the organization is not applicable. Right. So, in most of the cases, we can find out employees like Roshan. they are getting fixed salaries. But in the production organization, some of the production organizations, their salaries are depending upon number of hours that they are working, or else the number of items that they are producing. Either one of those two ways. Right. Then the following additional information is also provided. A typical working month consists of 160 normal working hours. Within brackets, they say basic salary. What does that mean? That means usually within 1 month, those employees should work 160 hours. That means within brackets, they say it's basic salary. You have to calculate, you have to compute the basic salary for 160 hours. 460 hours. Then they say overtime is calculated 140% on the normal hourly wage rate. As I told you before, OT rates are higher than the normal rates, and they say if those employees they have worked more than 160 hours, that they are exceeding 160 hours, for the additional number of hours they are paying at a rate which is 140% of the normal wage rate. Right. Then employers' contribution and employees' contribution to the EPF is 12% and 8%. Yes, we know that. Employees' trust fund or the ETF is 3% on the basic salary. So basic salary, as I told you, you can calculate EPF or ETF either depending on the basic salary or either depending upon the gross salary. One of those two. So in the question they clearly say it's a basic salary. So what if the question is silent on that? Sometimes they may say calculate it upon basic salary, sometimes they may say it's upon the gross salary. Sometimes question may silent. So if the question is silent, always you have to go with the basic salary. You have to calculate the EPF and ETF on the basic salary. Right? Why? What's the reason for that? Usually, the normal practice of the organization is to calculate EPF and ETF on basic salary. Basic salary. Why they are not calculating EPF and ETF on gross salary? So, as for the knowledge that we have up to now, we know that gross salary is higher than the basic salary. Gross salary is higher than the basic salary. So 8%, 12% and 3% are calculating upon the gross salary. That amount, that figure is much more higher than the amount that you are calculated based on the basic salary. So the deduction from the employees is higher if the base is gross salary. On the other hand, employers' expenses are also higher if the base is gross salary. So in order to take like it to a win-win situation, they are using the basic salary as the basis to calculate EPF and ETF. Keep that in your mind. Then, in addition to the basic monthly salary, all employees are entitled to a cost of living allowance of 3,000 per month. So allowance, always allowance, it's an addition. Allowance is an addition to the basic salary. Then SM Kavindra and TB Yamuna has subscribed to an insurance scheme and their monthly contribution of 500 rupees each should be deducted from their salary. Yes, a deduction, right? Deduction. They have registered with an insurance scheme. For that, they have to pay 500 rupees each month as the insurance installment or the premium. So in the deductions, you have to have a separate column called insurance, and it's not a mandatory column. So that column came up with the nature of the question. So that's why I have told you, always read the question very carefully, then you can understand what are the columns that you have to include. Right. So let's start. Right. Name of the employee. First we have to start with this name of the employee. First one is the SM Kavindra. SM Kavindra. Right. Now we have to calculate the basic salary. So they say basic salary in a normal typical working month, it consists with 160 hours. So the wage rate for that employee is 100 rupees. Therefore, you have to calculate the basic salary by multiplying the number of hours from the wage rate. Then 160. The wage rate for Kavindra is 100. Therefore, basic salary of Kavindra is 16,000. Then LV Gayesha. Again, for Gayesha, not only for Gayesha, all the employees. typical working month consists with 160 hours. Wage rate is 110 rupees. Wage rate is 110 rupees. Therefore, in order to calculate the basic salary, of Gayesha, you have to multiply 160 hours from the wage rate, which is 110. That means basic salary of Gayesha is 17,600. Right. Then take the next employee, TB Yamuna. Again, for TB Yamuna, normal working month consists with 160 hours. Wage rate is 115. Therefore, in order to calculate the basic salary, you have to multiply 160 hours by the wage rate, which is 115. That is 18,400. Right. Now, we got the answers for the basic salary of each and every employee. Another employee is remaining. Who is that? SP Roshan. So, SP Roshan, number of hours is not applicable for that person. He is getting fixed monthly salary of 35,000. Therefore, we can say basic salary of Roshan is 35,000. No need to calculate the number of hours again. For this employee, number of hours are not applicable even. Separate wage rate is not applicable for Roshan. Therefore, the fixed monthly salary is the basic salary of Roshan. Right. Then, as we said, typical month consists of 160 hours. Now we have to consider how many hours that each of these employees have worked for the month of February. Right. If you take Kavindra, they say they have worked, that person has worked 180 hours. Usually he has to work only 160 hours. He has exceed 20 hours. That means 20 hours can be calculated for the OT. Right. 20. Then we have calculated number of hours for OT. Now we have to decide the OT rate applicable to Kavindra. Right. They say overtime is calculated 114% on the normal hourly wage rate. If we take normal hourly wage rate is 100, OT rate is 140. Right. So we have to apply that theory for each of these three situations. Right. Let's take Kavindra. His normal wage rate is 100. OT rate is like 140%. That means OT rate for Kavindra is 140 rupees. For Kavindra, OT rate is 140 rupees. Right. In order to calculate the OT in rupees, we have to multiply this OT rate. Let's say this is rupees. We have to multiply this OT rate by number of OT hours. For Kavindra, OT hours are 20. Why? He has worked 180 hours. That means exceeding 20 hours from the normal rate of which is 160. Right. Then from this we have to decide what is the OT applicable for Kavindra. So it comes as 2,800. Right. In the similar way for Gayesha. Right. For Gayesha, normal wage rate is 110. OT rate is like 140%. Like in the previous question. Okay. Rupees. So we have to calculate the OT rate applicable for Gayesha. So it comes as 154 rupees. 154 rupees per hour. Right. Now we have to decide number of OT hours. So she has worked for 170 hours. That means exceeding 160, which is 10 hours. Therefore, OT amount applicable for Gayesha is 1,540. Right. Then Yamuna, do we need to calculate OT rate for Yamuna? No. Why? She has worked only 160 hours. That means no any OT hour is applicable for Yamuna. Therefore, OT is not applicable for Yamuna. Then SP Roshan again, OT is not applicable for that employee. Why? He is getting a fixed salary. Number of hours are not related with his salary. Right. Okay. Then this question says about the allowances. As additional information number 3, they say in addition to the basic monthly salary, all employees are entitled to a cost of living allowance of 3,000 per month. So for each employee, they are allowed to have 3,000. Irrespective of the way they are calculating the salaries, all employees are entitled to have 3,000 allowance. So we can say this as cost of living allowance. Cost of living allowance. To be more specific, you can say that. Right. Now you can easily calculate the gross salary. Right. But I'm not going to do the computations right now. I'm moving on to other columns. So I can calculate EPF, employee contribution for EPF, employer contribution to EPF and the ETF at once. Right. So I'll keep that part. And I have another deduction which is insurance. Final additional information, they say SM Kavindra and TB Yamuna has subscribed to the insurance scheme and the monthly contribution is 500. Therefore, for Kavindra, insurance contribution is 500. And it's applicable for Yamuna as well. It's not applicable for other two employees. Right. Then we can calculate the EPF and ETF. Right. The base is the basic salary. Okay. Now I start with the Kavindra. So base is 16,000. Employee EPF contribution is 8%. So I multiply it by 8%. Amount is 1,280. Right. Then I can calculate 12% and 3% from that 16%. So the amounts are 1,920 and 480. Right. Then you have to apply the similar process for Gayesha, Yamuna and Roshan. Right. So let's quickly calculate it. 17,600. Rate is here 8%. 1,408. 17,600 into 12%, which is 2,112. Then 17,600 into 3%, which is 528. Then Yamuna, basic salary, the base is 18,400. So 18,400 into 8%, which is 1,472. Similar way, 12%, 2,208, then 8,400 into 3%, 552. Then for Roshan, 35,000 into 8%, 2,800, then 12%, which is 4,200, 3%, 35,000 into 3%, which is 1,050. Right. Actually, now we are done. So in your exam point of view, marks are allocated mostly for those areas. Right. Now we have to fill the remaining columns. So you have to put the gross salaries, then total deductions and the net salaries. So I'll take one. First one, Kavindra. So we know basic salary is there, OT is there, cost of living allowance is there. So the total is 16,000 plus 3,000, that is 19,000 plus 2,800 means 21,800. Right. Then Gayesha 17,600 plus 1,540 plus 3,000, 22,140. Then Yamuna 18,400 plus 3,000, that means 21,400. Roshan 35,000 plus 3,000, 38,000. Right. Then you have to fill the total deduction column. So in this case there are two. Deductions. For those two employees there's only one deduction. So 1,280 plus 500, 1,780. Here it's 1,408. Here it's 1,972. Here it's 2,800. Right. Then you have to calculate the net salary. How to calculate net salary? You have to deduct the total deductions, right? Don't add those three columns, right? Don't add all the three columns. Why? Here you took the total into the total deduction column. Therefore, you have to deduct this amount from the gross salary. Therefore, Kavindra, it's 21,800 minus 1,780, that is 2,020. Kayesha, gross salary is 22,140 minus 1,408, which is 20,732. Yamuna 21,400 minus 1,972, which is 19,428. Finally, Roshan 38,000 minus 2,800, which is 35,200. Right. So now we are done with the question. Finally, what you have to do is you have to take the total of all columns. You have to take the total of all the columns. In this way, you have to take the total. Right. So this is the extent that the examiner is checking the payroll knowledge in your exam. So they may give like 3 to 4 employees. In this year, this time, it was based on number of hours. In the next time, they may say the basis is the number of units. Right, number of units. So for a typical number of months, they say you have to produce 1,000 units. Right. So if you are exceeding 1,000 units, then you may get an additional allowance for that. Likewise. Right. So for this mark, the examiner is allocating 5 marks. Right. I think so. With this question, this is a very comprehensive question. So you can get the understanding of all the theoretical stuff that we have discussed. Right. Okay. So let's move on to the next part, which is the accounting for salaries. Right. So in order to assist the accounting process regarding the salaries, we are preparing an account called salary or the payroll or the wage control, whatever it is. Salary control account, I would say salary control account. You can say the wage control account or payroll control account. Right. So what's the purpose of preparing this account? The first thing that you have to understand is we can consider this account as a temporary account. So why we are considering this as a temporary account? there's no point of taking the balance of the salary control account to the next accounting period. Yes, you can take the balances. You may find that some questions where there's an opening balance of salary control accounts, but it's not a mandatory requirement. It's not a mandatory requirement. Why I'm saying that? Using the salary control account, you can find the salary amount that is payable to the employees, or else, in very simple terms, by using the salary control account, you can find the net salary. So in the previous question, yes, using the payroll, by having that structure, you can easily find the net salary. But in the accounting process, we are not going to prepare that pay sheet or the salary sheet. Yes, we are preparing. That's a separate story. That's for cost accounting part. Now this is financial accounting. Now we are coming towards the financial accounting part from the cost accounting part. Right. In here, the purpose is the preparation of salary control account is to find out the net salary, either that we have paid to employees or payable to employees. Either we are paying to employees or payable to employees, right? So sometimes you can carry forward salary control account balance by assuming this account is similar to salary or the wage payable account, right? Without preparing a wage payable or the salary payable account, you can continue the salary control account, but the best practice is to transfer the balance of this account towards a salary payable account. Let's discuss this part with the use of a question, right? So for that, I have selected one question which is July 2018, question number 4. Not from the new syllabus, but still you can apply it for your level, right? July 2018, question number 4. Question number 4, right? Let's read the question first. Now you are having that basic understanding or the conceptual understanding, but there are some few additions as well. The following balances were extracted from the books of accounts of South Pole Private Limited for the month of March 2018. Right. So they say basic salary prior to payee, loan installment and EPF 8% deduction. Sorry. So what does that say? Basic salary prior to payee, loan installment and EPF deductions. That means that you can refer to that as either gross salary. You can say the gross salary as well. In this company, we have to assume basic salary and gross salary are equal. Why? So the difference between basic salary and the gross salary is for the OT and allowances. So if there's a company, no OTs, no allowances, then basic salary and gross salary are same. Therefore, in this question, yes, I have told you that you have to ignore the basic salary. But in this question, basic salary and gross salary are equal. So you can either say this 7,320,000, you can directly say that as the gross salary. Then pay deduction is 180,000, loan installment deduction is 50,000. So previous question, we had DPF and we had insurance. So in here they say another two deductions. One is pay as you earn that we have discussed, and the loan installment deduction. Right. 8% from the basic salary of employees is deducted for Employees Provident Fund (EPF). Then the company contribution at 12% for EPF and 3% to ETF from the basic salary. So as I told you, always they say what's the base for deduction of EPF and ETF. Employee salaries were paid on 31st March 2018 and contributions for EPF and ETF were paid on 10th April 2018. Right? So one important that I have to mention here is company policies are there. It's different. Some companies, they are paying their employees' salaries in the same month. So in this question, it's the month of March. So they are paying that in the 31st March. So within the month, they are paying the salary. Therefore, we cannot find out a balance called salary payable. So as of 31st March, we are paying the salaries. Therefore, there's no any expense called salary payable. Right? But there are some other companies that they are paying the salaries for their employees in the following month. So you may have heard that in some organizations, some government organizations even, they pay salaries in the 10th of the following month. 10th of the following month. Therefore, at the end of the current or the month that we are considering, that salary is payable. The salary is payable. That becomes an accrued expense, a liability. Right. But in this question, they say at the end of the month they are paying the salary. Right. So you have to be very careful about the date of paying the salaries. Then the other thing, I have told you that EPF and ETF, usually we have to transfer those EPF and ETF to Central Bank of Sri Lanka. So Central Bank of Sri Lanka, they say the EPF and ETF of one particular month, they have to pay that amount in the following month. They say, as an example in this question, the month is March, but they have to transfer the EPF and ETF to the Central Bank in the 10th. That means next month, 10th of April. So EPF and ETF figures are payable. Now they become payable as at 31st March. As at 31st March, those figures are now payable or accrued. Right. You should have this understanding very clearly. Okay, now let's see how to record the salaries. I'll take this account to this side, so I can use the board in this side. Right. Salary control account. Right. Okay. So as I told you, now you are having the understanding of the payroll, the format of the payroll. So in the format of the payroll, we are ignoring basic salary, OT, allowances. So we are starting off with the gross salary. So in this question, gross salaries. So let's remove the thousands and let's do the questions without having the thousands. So in this question, they say gross salary is 7,320. Okay. So first step is how to record the gross salary. Now we are considering about double entry. Double entry for gross salary. Right. One of the important thing that you have to understand is this gross salary is the salary expense of the organization. Gross salary is a salary expense, not the basic salary, not the net salary. It is the gross salary. Gross salary is the expense applicable for the period of the organization. Therefore, in anywhere, if they say the salary expense or the wage expense, it is the gross salary. Right. Therefore, this gross salary is a salary expense. Right. Now, what is the double entry? So, if it is the expense, we have to say salary expense account debit 7,320. Now I am writing the double entry for your understanding. In the question, there is no requirement to write the double entry, but for your understanding, now I am taking the double entries as well. Right. So it is the expense, therefore expenses should be debit. Salary expense account debit 7,320. The respective other entry should be transferred towards the salary control account. Therefore, salary control account credit 7,320. Right. So now we have to take that into salary control account. 7,320 respective debit entries there in the salary expense. Right. Then next one, the deductions. So deductions, we cannot take the total. We have to take one by one. Right. So let's start with the pay. So what do you mean by the pay? Pay means you have to deduct that amount from the employee's salary and you have to transfer it to the IRD, Inland Revenue Department. So it's a payable. You cannot keep that amount. You cannot keep the pay. You in the sense the company cannot keep that pay amount. They have to transfer it to the IRD or to the government. Okay. Right. Now what's the double entry? Okay. The salary amount is credited to the salary control account. Now the deductions. So this is the gross salary deduction. So we have to represent that now we are deducting those figures from the salary expense, this amount, or from the gross salary. Therefore, all the deductions, right? Keep in your mind, all the deductions should be there in the debit side of the salary control account. All the deductions should be there in the debit side of the salary control account. Right. Therefore, deductions, let's take one by one. First one, pay. For pay, the double entry is deductions. All the deductions should be debited to salary control account. Therefore, salary control account debit 180. Then respective other entry should go to payable. Why we are saying it's payable? It's not relevant for us. We cannot have the ownership of this figure, this amount. We have to transfer that amount to Inland Revenue Department. Therefore, now as at 31st March, it becomes a liability. Payable 180. Therefore, now you can record 180 in the salary control account, which is payable. Right. Next one, loan installment deduction. So I take the next one, loan installment. Right. So in the same way, deduction, therefore salary control account should be debited. Salary control account debit 50. Now, respective credit entry. So you have to now understand the process of bank loans. So organization, the South Pole Private Limited, they are deducting the installment and they are transferring that installment to the respective bank. Now they cannot claim the ownership of that amount. The company, South Pole company, cannot claim the ownership of that installment. They have to transfer. That amount to the bank because that amount is owned by the bank. But at the moment, as at 31st March, they are keeping that amount with them. Therefore, it becomes a liability. Loan installment. It's a liability that we have to pay to the bank. Therefore, you can easily take it as loan installment account credit 50. You cannot say bank loan credit 50. Why? What's the reason for that? Because company itself didn't take the bank loan. Therefore, we cannot say that we have to credit to the bank loan account. It's not reasonable. Therefore, you can take the account as just bank loan account 50. Now we have to transfer that amount to the salary control account, the debit side 50 as loan installment. Right. So in the question directly they have given those two deductions from the gross salary, but there's another deduction from the employee's perspective, from the employee's point of view. What is that? It's the EPF 8% deduction. EPF 8% because take the first figure, they say basic salary prior to pay, loan installment and EPF 8% deduction. So you have to manually calculate the EPF which is applicable for employees as a deduction, which is 8%. Right. So they say the base is the basic salary. To calculate this 8%. So in this question, they say the basic salary and gross salary are equal. Therefore, the base is 7,320. Don't misunderstand. It's not from the gross salary. It's from the basic salary. But in this question, basic salary and gross salary are identical. Therefore, 7,320 is the basic salary. Therefore, you have to calculate 8% from that amount. Therefore, 7,320 into 8%, which is 585.6. So, Again, deduction should be debited to salary control account. Therefore, salary control account debit 585.6. Now, where we have to put the credit entry. The credit entry. So EPF, we know that question says they are transferring the EPF to the central bank 10th of the following month. Therefore, we have to say now EPF payable account credit 585.6. Okay, now here you can say EPF payable 585.6. 585.6. Right. So now we are done with the deductions. Next step is the net salary. So you have to have the understanding of the format of the payroll. So now we are going in that process. Gross salary, deduction separately, then the net salary. So they say they are paying the net salary at the end of each month. So the double entry for salary payment. So I'll take it here. Right. The net salary that you are paying, So 1, 2, 3, 4. Altogether we had 4 entries. The fifth entry, or as the third entry, major third one, gross salary deductions, then the net salary. Right. So net salary we are paying at the end of each month. Therefore, cash account is credited. So where we have to put the respective debit entry. So we can find the net salary from the salary control account. How to find? Now you can balance this account. 7,320. I have told you that this is a temporary account, not a permanent one. By balancing out this account, you can find the salary amount which is payable. So gross salary is 7,320. From that there are 3 deductions. One is 180, other one is 50, other one is 585.6. So the net salary is 6,504.4. 6,504.4. This is the net salary. So company policy is to pay the net salary at the end of each month. Therefore, respective credit entry should go to the cash account. Now the double entry for net salary. Now you know. Salary control account debit 6,504.4 and cash account credit 6,504.4. So if the question says they are not paying the salary in the same month, this becomes salary payable, not the cash. Salary control account debit 6,504.4, salary payable credit 6,504. But in this question they are paying in the respective month, therefore you can credit the cash. Okay. Now we are done with the salary control account. Here. So you cannot carry forward the balance of salary control account to the next accounting period. Why? Now we are done with the salary control account. We have find out the net salary that is payable to the employees. Right. But accounting process is not over. Employees' perspective is now done. Then we have to go for the employer's perspective of the salary, which is EPF 12% and ETF 3%. Right. So the next part, so I take as number 4, which is major one. Number 4, employer's contribution. Right. Employer's contribution. First one, EPF 12%. Okay. Now you cannot put the EPF contribution, so the employer's contribution into salary control account. Now we are done with the salary control account. Salary control account, we are starting from the gross salary and we are ending it by the net salary. Now we are done. So this is employer's part. So as I told you before, employer's EPF and ETF become expenses for the organization. For the employer, they become expenses. Therefore, we have to say, let's take EPF which is 12%, EPF expense debit. Let's find out the figure. So basic salary is 7,320. Applicable rate is 12%. So EPF expense, employer's EPF is 878.4. So it goes to EPF expense account. Then again, this amount also credited to the EPF payable account. So there's one figure. Now there's one figure in the EPF payable account which is 855.6. That's from the employees. Now employer's EPF also should be credited to that particular payable account. Therefore, EPF payable account credit 878.4. Right. Then ETF, which is 3%. So again, now you know ETF, again it becomes an expense. ETF expense. Why those figures are becoming expenses? Because the company should pay those amounts on behalf of their employees. So additional payment, that means they are expenses. ETF expense debit 3% from the basic salary, 7,320 into 3%, which is 219.6. Then process is very similar to EPF. So we are paying ETF in the next month, Therefore, we have to have a separate account. You cannot credit that into the EPF payable account. You have to have another separate account which is ETF payable 219.6. So this is the process of double entry for the salary related accounting. Right? First the gross salary, then deductions one by one, then net salary, then employer's contribution for EPF and ETF. Right? So for the exam question requirement, as the part B, they are asking for the EPF payable account. You have prepared the salary control account, so they are asking for the EPF payable account as well. So EPF payable account, there are two entries for the credit side. One is from the employees, other one is from the employers. So you can prepare the EPF payable account as well. So I'll take it here. EPF payable account. Right. First one. So salary control account debit, EPF payable credit. Therefore, you have to take that figure 585.6, which is coming from the salary control account. Then other one from the employer's contribution, EPF expense debit and EPF payable credit. Therefore, that amount should be credited as EPF expense. Figure is 878.4. Those are the two. Then you are having EPF payable from two sources. Then you have to take the total and you have to balance the account. So in the question, in the exam, they are asking specifically for accounts. You have to balance them. So one is 585.6, other one is 878.4. Total is 1,464. 1464. So it becomes carry down balance 1464. That means you have to pay 1,464,000 rupees for the Central Bank of Sri Lanka as EPF. ETF, it's just one entry, which is 219.6. Right. So this is the accounting or the financial accounting part regarding the salaries of the employees. So I hope now you are having a crystal clear understanding regarding the salaries of employees from both the perspective of cost accounting and the financial accounting. In the cost accounting, you are preparing the payroll or the salary sheet. In the financial accounting perspective, you are preparing salary control account and other accounts. So I have given you all the double entries, you can follow them. So those double entries are fixed, so they are always same as it is. Only addition is if there are more deductions, then you are having more entries, but the process is same as it is. So hope you have learned it very well. Let's meet with another discussion regarding another aspect in your AAT2, which is financial accounting and costing. Thank you very much.